Welcome back to the Money and Wealth Show. I'm Sterling Fox. Our special guest this week, precious metals analyst David Morgan from themorganreport.com. And David, you promised we'd look at precious metals, your area of specialization, gold and silver, doing very well. Geopolitically, the world is pretty shaky these days. People are very uncertain. There's a lot of sovereign debt. A lot of people are looking to security. Financial security. And a lot of people see gold and or silver as that answer to sleep well at night and get through whatever storm we're currently riding through. Tell us a little bit about where precious metals are at these days.
Well, Sterling, they've been doing their job for the last decade. I mean, basically, there's something in an asset class that stands alone outside of all their assets. And I like to say it stands outside the matrix. And I use the word matrix because everything that we own as an asset, if it's real estate, if it's a stock, if it's a bond, if it's a limited partnership, if it's an option of futures, it doesn't matter. It depends upon some electronic trading platform in order to liquidate. Even a real estate portfolio, you actually have to go through some kind of bank or mortgage broker to liquidate, and that depends on the banking system, which again is an electronic platform. So the only thing that's outside of that that's real wealth is gold and silver, and it's been that way for thousands of years. It's the proven reserve asset, if you will, and that's why banks used to use gold as their main holding. Of course, we've gotten away from that for several years, and any time that's happened in monetary history, there's been a price to pay. The problem is the price to pay this time is on a global basis,
right,
and we're starting to see that break down. I called for a currency crisis years ago. I didn't say exactly when it would happen. No one can forecast that, but you can forecast that it will happen. It's basically taking place in the euro. There's analysts such as myself and several others that are backing me up, and you see it on the mainstream news now. And I get a bit of a chuckle about Sterling is that these guys sound like me now on mainstream television, and yet I was a radical something or else, you know, I can't say it here on TV, a few years back when I was saying exactly the same thing. So they're sort of catching up to me and others that have predicted this.
Right. Well, a lot of mainstream media, of course, isn't as focused as an expert like yourself who dedicates his entire life and his career to paying attention to the fine details. And it's the details. The devil, as the old saying goes, is in the details. Talk to us a little bit about those who disparage gold and silver, David, because they say all very well and good. It is a commodity that has historic value and probably will hold that value for another 1,000 years. But you can't buy groceries with gold. So in a practical sense, it doesn't work.
Yeah, I think that's a great question, and I've probably thought about it as much as anybody. And I think the real reason is more psychological than anything else. I mean, certainly you could buy groceries with gold if you had to, especially if things broke down further. But it is an admission to the investor or the human being, if you will, that something is wrong with the system. Because you have to kind of make that conscious choice within yourself to say, you know what, I think I am going to get a little bit of gold because maybe those guys are right or those gals are right. That scenario, although it's very unlikely, still has a possibility. And once you cross that line, you've made a big leap of faith, because what you've done is you've put some credence into reality, into monetary history, into civilizations having these type of problems again and again and again. And most people would rather be in this almost what I call Pollyanna world, or kind of the sleepy state, I call it, believing the political structure and their quote-unquote leaders that are telling them everything's okay, we've got the handle on the controls, hold on, the ride's going to smooth out any day now. So that's the problem, because when you actually face reality and take self-responsibility for your own, wealth protection or your own well-being financially, you have to suck it up and man up, so to speak, and say, you know what? I am going to make sure that I'm okay, regardless of what happens. Of course, I made that decision at about 11 years of age, so, I am a bit biased. But I also studied very hard, as you said, and history repeats again and again. Not exactly, but I think we're in for some rough times ahead.
Now, in terms of a person's portfolio and the desire to have the security and the peace of mind that gold and silver can provide to some people,
right,
what percentage of one's overall portfolio would you recommend be physical gold and or silver?
Great question, and I think it's one of the best you can ask. I was asked to write the Silver Investing Rules for the Investing Rule Book of the United Kingdom. That book has been published about 10 years ago, and that was the last rule number 10. And I said, too much of a good thing is too much of a good thing.
Okay.
Meaning what? In that book I said 10%. Now, since that book was published and before the war broke out, so this is going back again several years, I said, you know, I'm seeing a war atmosphere coming up. You might go as high as 20%. But 10% works for most people. And I want to expound on that a bit, Sterling, if you'll let me.
Sure.
Because we just finished a debate between John Nadler, who's kind of known as a gold bear, and Frank Holmes, who runs a fund, and Frank took the bullish side of gold. And, you know, on behalf of Nadler, when he got all done, he basically said 10% is enough, put it into gold, sleep well at night, and don't even worry about it. Don't worry about the paper price, don't worry about what it's doing in different currencies. Own 10% and forget about it. Now, I'm not saying I agree word for word with John, but I think his attitude is actually pretty decent because some people overinvest in any particular sector. Now, I'm overinvested in the metals, and there's a reason for that. It's my life, it's
Sure.
my livelihood, it's what I know best. But a lot of people that have, you know, businesses or whatever have different portfolio structures, and it works for them. Whatever works for you, I'd say 10% is probably plenty for most people.
So basically, the advice, as I'm able to read between the lines, is avoid extremes.
Right.
Keep your head on your shoulders and keep your eyes focused on the task ahead, which is getting through all of this. And so look for balance, right?
Absolutely. You know, I'm going to digress here a little bit, but life preaches balance. I mean, you want to be balanced physically, mentally, and spiritually. You know, that's why I look at life. I'm not trying to give you a life lecture, but it's the same with a portfolio.
Sure.
You don't want to be weighted too far, and you don't want to be so extreme, like say in leveraged positions as an example, that you can't sleep at night. I mean, that's not a portfolio structure that anyone should have. So, you know, there's a lot of mistakes that investors make again and again and again, and I get to see them, and part of what I do is teaching an investment philosophy that would adhere to any type of investment, let alone the precious metals. And you see it, I think, in the metals more than any other area because there's so much discontinuity between the amount of leverage you can use in the metals markets and the type of investments that are available in the penny stocks. And both of those are extremely risky, and people tend to put too much into those very risky investments and not enough in the solid investments, which is the opposite of what I teach.
All right, our special guest this week is precious metals analyst David Morgan here on the Money and Wealth Show. Lots more to come. Stay with us.
Good afternoon. My name is Larry Ray. I'm the president and CEO of Gold Ray Resources Corp., a company that trades on the TSX Venture Exchange and has the majority of its operations in China. We are currently developing a resource there with limited production at this time. Our goal is to increase this production up to about 1,200 to 1,500 tons per day, and to do that, we are negotiating with several Chinese companies, one of which will become our partner either directly into the company or into the project, which will allow us to move the project up to the desired tonnage. For further information, please visit our website at goldray.com or phone 604-531-9639.